Hello and welcome to the Scalping Playbook. So points we're going to cover in this lesson is what the Scalp Playbook is about, an overview of how to use it, the entries, our TP targets, how to manage our trades, and who this method is suited for. So what I want you to cover first is make sure you've gone through all the lessons, but the in particular points that you'll need to understand is order block variations, imbalance, inside bars, liquidity, premium and discount. So the Scalp Playbook is my take on SMC on the lower time frames. And I've set myself some rules with the way that I trade. So I like to be in and out of the markets relatively quickly. I don't like to stay in the markets for too long. I like to open a trade, be in it for maybe half hour to a couple of hours, and then get on with the rest of my day. I usually set modest targets. I don't usually target any higher than 5R. On the odd occasion, I may go up to 10R. Just a bit like this trade here. This is 10R or 10 return. For 1% risk, it was a 10% trade. For 0.5% risk, it was 5%. That's how the R works. So on the odd occasion, I may target higher than 5R, and I'll explain why this one was more than 5 in a moment. So most people look at scalping as having to sit there in front of a screen for the entire day looking for trade opportunities. But the way that I scalp, I don't do that at all. I set myself specific times of the day where I will look for potential trade setups, and if a trade setup occurs in that time period, then I will look to take it. Otherwise, if there's any other trade setups outside of those hours, I don't bother even looking at them. I would just wait for the correct setups to arise within my trading window. So what I like to look for is, as you can see here, this is the Asia session, and I've marked Asia as closing at 7 in the morning. This is London time, okay, and then 8 o'clock. So I have a window from 7 o'clock in the morning to roughly 10 o'clock in the morning where I will be looking for potential trades. I then also look around the time of New York Open, which is roughly 1 o'clock UK time. So let's dig into this trade. So first off, we've got the Asia session here, as we've established. We've got a break of structure, okay, and as Europe has opened at 7 o'clock in the morning, price has come down. It's broken this structure here, which has given us an indication that price wants to continue bearish. All right, we've not had a liquidity sweep from the top. All right, so we could be looking for a liquidity sweep to the downside. Now, the reason I'm favouring to the downside is because prior to this, we had a very impulsive movement. And if I zoom out, you will see it. Okay, we've had this. I believe this was NFP. Was that NFP or was it an interest rate decision? Either way, it was a very big impulsive movement. We've got a hell of a lot of imbalance there, and we've also got this liquidity below here. So we've got some equal lows that need to be swept. So at this point, I was favouring, if we've had a significant break of structure like this, I was favouring a short. Now that's the reason why I looked for a 10R target. As I previously mentioned, I usually look for around about 5R, but the reason, yeah, again, I aim for 10R was because there was a good chance that some of that imbalance was going to be swept up. So let's zoom in, let's analyse this a little bit further. Now we've had this break of structure. I'll tell you what, I'm going to drop to the 30-second time frame because this is where the trade was actually executed on. Let's just set the proportions a little bit clearer. There we go. Right, so we've had this break of structure, and then we've had some bullish movements. Okay, so we've had a new high created. We've pulled back, pushed up again, slight pullback, okay, and we've made some very subtle highs. These would be more prominent if we drop down to the 15-second, which I won't do. Okay, price then pushed beyond this high, which is then created our breaker structure here. Okay, and then this breaker structure is then confirmed as a chop once we then break this low. As you can see, price pushed up. We've had our liquidity grab. Okay, we've then come down. We've had an impulsive movement from here, and we've got an inside bar. All right, so the impulsive movement, we've then created our chalk, which then turns this into a chalk, And as prices come back up to clear this imbalance, okay, we've pushed in, we've tapped into our trade, okay. As you can see, my entry was here because as this was setting up, I was not fully prepared and I did a market execution. So my entry was a little bit late, but it still worked absolutely fine. So moving on, we've had our tap into the inside bar, we've had this imbalance cleared up. Okay, so this trade has met all of our requirements to continue going short. So let's have a look at this. As you can see, price push down, it's created more lows. We've had a bit of a pullback here, grabbing some more liquidity before we continue pushing further down. So we've swept liquidity to the downside of the Asia session, and we've then come back to clear quite a bit of this imbalance here. Now, another good thing that this 10R target lined up with is, let me just grab the GAN box. Where is it? There we are. So, the imbalance here, the target was roughly 50% of this imbalance. So, we've had, let me just adjust this a bit better. So, there we go. So we've got this imbalance here. Any imbalance from here had been cleared up by this price action there. Okay, but we still, let's zoom in a bit clearer. So we still had a lot of this price action here to be swept up. Okay, sorry, imbalance to be swept up. The price needed to come back to this area to create a fair market for traders to get back in. So that's roughly where we had our TP for this trade, and as you can see, it played out pretty nicely and it continued going further. Okay, so let's have a look at a trade example. Now, currently what we have here, we've got some bullish price action on the Asia session for Euro US dollar. Now, we've tapped into this higher time frame demand zone, and from here, typically on a swing trade, you might be looking for an entry around here, but with scalping, if you've missed your entry somewhere within the higher time frame, or as we've pushed away from it, from scalping, we can start looking for the continuations and target the higher time frame direction. So what we've got here, we've got a significant break of structure just here. So you can see we've got this high here, and we've had a break of structure here. Now, let's mark out our demand zone. So we've got a inside bar here. This is the origin of where this move came from. So we're going to look at this area here. So now this is quite a small area. So let's zoom in a little bit more, make it easier to see. Now what I'm going to do, I'm going to include, because this is quite a small area, we've got a range here of roughly 1 pip, so it's quite a small area. So rather than having just the range of this inside bar, I'm going to be targeting this whole area as well. So I'm going to include that previous candle. So let's drag this out. So for this entry, we've got our demand zone here. Sorry, let's change this to blue. We've got our demand zone here. This demand zone is caused this break of structure, so we can mark this out. So we've got our break of structure. Now, what we've got going on, we've had this impulsive movement, and then price has just gone sideways. It hasn't broken any significant structure. It hasn't really done anything. It hasn't tried to commit to a certain direction. So what I'll then be looking at doing is marking out this area as a range. Now what this is telling us is that there's liquidity being built. All right, so what we've had happen, we've got these equal highs here. Okay, these equal highs have not been swept until we get to price action around here. So this is our liquidity grab here. So let's mark out our equal highs. We can either mark them equal highs, or I just typically use the dollar symbol because this is where the money is. Now, here we've kind of got equal lows. We've got a very, very subtle liquidity sweep here, but I'm not really going to see that as a significant liquidity sweep because that is likely less than a pip. Yeah, it's 0.3. All right, so I'm not going to count that as a liquidity sweep. So we've got equal lows here. So we've got this area that we're still expecting to push down. So we've got some imbalance. Let's zoom in. We've got some imbalance just above our demand zone. This imbalance has been cleared up. This has also been cleared up. So we've got this imbalance on this candle that's still yet to be taken, or sorry, filled. That imbalance is still yet to be filled. So from here, we've now got a reason that price is going to come back to this area. Okay, so what we're going to look at doing, we are going to grab our long tool, and so I take a minimum stop loss of 2.5 pips. Okay, so that's what the 2.5 means. That's 2 pips. That's 0.5. So that's 2.5 pips. That's typically the lowest I will go. Reason for that is mainly for prop firms. So for FTMO, my Forex funds, their spreads on Euro US dollar. Sometimes it's at 0, but it tends to fluctuate. Sometimes between 0.2 and half a pip in more volatile trading sessions. So I like to give myself a little bit of breathing room just in case. All right, on my personal account, I'll do exactly the same. I'll keep everything the same for my personal account and my funded accounts. Reason for that, I just like to keep things simple. I don't want to be thinking, right, prices taking me out of my personal account at a 1 pip stop loss, but my funded accounts are still running because it hasn't quite reached that far. I just keep everything the same so I don't start overcomplicating things. So, like I said before, we are going to target a 5R target, all right, or 5% if you're risking 1%. There we go, 5R, and that brings us up to the high of the Asia session. So we've already had a sweep of the Asia highs, so we've kind of had that confluence taken away from us. However, we've still got bullish price action, and we are still pushing away from a higher time frame demand zone. So this is giving us a good reason that price is potentially still going to start pushing higher. Okay, now I already know what's going to happen with this trade because I took this the other day, and if you're in the community still already, you'll know what I mean. All right, so price comes down to this area, starts trickling down. We've taken this liquidity here, and you can see we are in the process of filling this imbalance just there. Now what happens from here, we then get tapped in, and then we have a even deeper tap in. I think this is, at this point, is the liquidity grab. And then we push out and we get a very, very quick impulsive movement. And what this is, I'm not going to even try and bluff and say that I predicted this because I clearly did not. All right, you might get some Instagram traders saying they did, and you know they held it on for till it got to the moon, but we don't do that here. I've got a target of 5R, and we reached that target, and that was me done trading for that day. So what happened here? This was actually a news event. I think it took a bit of research to find out what this news event was, but I think it was just pricing in some. I think some fears and volatility of the Ukraine crisis that happened on the weekend at that point. So when the markets opened, this was just pricing in some of the news that happened over the weekend. So the setup for this trade, you should hopefully recognise this entry model. Okay, if you don't recognise this entry model, I suggest having a quick look at the PDF that's in the Discord group, or it might be on the website by the time this video goes up. But what we've got here, we've got our impulsive movement, we've got our order block, the demand zone here, with liquidity inducement. So this is our inducement entry model. So trade management. We want to get our stop loss to entry when the trade hits 1R or a breaker structure, whichever one comes first. Or in those rare circumstances where a 10R target might be far more achievable, like the example shown earlier in the lesson. Only take a scale-in trade if the original trade has stop loss set to entry. So for the scalping playbook, we have some rules that we need to follow. So first off, have a set trading window. Now what I mean by this is having a period within the day where you will set a specific time where you will look for scalping opportunities. As I mentioned earlier on in the lesson, a lot of people see scalping as having to sit in front of a computer for the entire day just to find trade setups. That's not how this strategy works. Supply and demand zones, they need to be impulsive, break structure, and leave imbalance. If one of these conditions is not met, the trade is not valid. A set 5 RTP, now my stop loss is around about 2.5 pips, like I mentioned earlier on. So if you have a tighter stop loss, then your target distance is slightly shorter. If you have a slightly wider stop loss, then your target will be a little bit higher. Okay, but this is something that you need to try and strike a balance with within your back testing. 2.5 pips is a nice sweet spot for me. As I mentioned, this helps accommodate for the spreads within prop firms like FTMO, my Forex funds and stuff like that, just in case there is a little bit of fluctuation with the volatility. My personal account with IC Markets is raw spread, so I don't tend to really have that issue. But as I said, I keep everything the same with my prop firm accounts and my personal account. Now the liquidity inducement must follow your trade setup. What I mean by that is if you go back to the example I had with the range, so we had the orange box with the range highlighting the inducement. If that inducement had already swiped our demand zone before we're looking for a long trade, then the trade would not be valid. And once you've set your order, walk away and be confident in your analysis and check back later. Reason for this is you will typically find when you, especially in the early days of your trading career, you'll set an order and you'll be sat there glued to the screen waiting for it to tap in. Be confident in your analysis. By the time you get to the point of trading real funds, you should have back tested your trading extensively. So you should be at a point where you are comfortable taking trades based off your own analysis. So once you've set the trade or set the order, walk away, come back to it later. If it hits stop loss, it's only 1% or 1R, depending how much you've risked. If you risk 0.5%, you've only lost 0.5%. If you risked 1%, then you've only lost 1%. The next trade will cover it. So who is this strategy for? Some people like to minimise the stress of being in a trade for extended periods of time. And some people might have a busy day schedule. They might still be working a 9 to 5 job. They might be busy with businesses or family commitments, anything like that. So you might have a set window in the day where you can say, right, this is my trading time. Let's have a look for some setups. If nothing arises, close your computer down and go do something else. So hopefully you find this video useful. You may notice as well that there is not a great deal of difference between this strategy with scalping and the way we swing trade as well. The main differences is essentially the trade management, setting a 5R target, but we might be a little bit more aggressive with certain types of entries. So with swing trading, we might be looking for a higher time frame supply and demand zone and try and look for an entry model one within that. But with scalp, we may then start looking for continuations after that higher time frame mitigation has happened. And as usual, if you have any questions, feel free to drop them into the chat.